Okay, for the inflation is expected, is largely in line with what we expected from analysts, but the questionable thing is the one that's been raising question from all in the market is food inflation, which we've seen as the most significant impact on the inflation figures. Food inflation dropped by about 133 basis points from the January figure, so that is the major driver of the disinflation that we've seen, and this is expected. This is largely expected because it has been dropping steadily in the past couple of months, and what we've seen is the crisis in Benue that we expected largely to affect food prices, but that is not. Looking deeper into the figures, we saw that that was not the case. Prices of food dropped more in Kwara and other states like that. So from general expectation of the inflation figure, this is largely in line, but going deeper into the cause of the disinflation, it's slightly off from estimates and expectations.
Yeah, so what does that really tell us? It's interesting you should bring up the Benue issue. I also found that a bit puzzling, because when we had the rise in food inflation, it was attributed to the crisis in Benue, the herdsmen issue, and of course Benue being the food basket of the nation and the ripple effect that will have on the economy and the markets. But then seeing the figures we have before us today, like you mentioned earlier, we have those increases in Kwara, Yobe, and Kebbi. Care to share what might be playing out in Kwara, Yobe, and Kebbi State? Any ideas?
At this time, as at the time of this, because the figures just came out this morning, at the time of this, it's difficult to ascertain what exactly is the driver of that. But it's still, like you said, it's still puzzling, and as soon as possible, everybody is trying to get to the bottom of that to ensure accurate information. And since this is an index that sets the direction of a lot of things, rates and yields in the fixed income market, so it's good, it will be helpful to get to the bottom of it.
Akintade, just talk us through, what impact you think this is going to have going forward. What is your biggest takeaway from the figures you've seen so far?
Okay, in prices in the fixed income market, it has already been priced in because the figures came out early today before market, so it has already been priced into yields, discount rates and prices in the fixed income market. So in the bonds market, for example, prices open significantly higher than where they closed yesterday, and also this also happened in the treasury bills market. And going forward, we feel that this might also have an impact on the MPC in the deliberations that they'll have at the MPC meeting, because the committee would look at such indices while making their decision, and we see that being a major consideration at the next meeting.
At the next meeting, Adedimeji, we're still waiting for confirmation. I mean, the Senate is still back and forth on this particular issue. How optimistic are you that it will be resolved soonest?
Hopefully, everybody is hopeful. The market has been looking to the Senate for a while to resolve this impasse in the CBN. So we just hope that very soon we'll get a clearer direction of where rates will be going into the year.
And then, do you think their absence has affected anything, drastically in the past few months? There are those who say, look, if the MPCs sit today, they will still hold rates, as it were. So there really isn't any major difference if they come together or not. What do you say?
The absence of the meeting, the not holding the meeting has not significantly affected the market as such, because considering the fact that the rate has been held for a couple of months, so but it just helps to give a direction, shows the economy in a good light to the international counterparties that deal with Nigeria. They want to have the decision-making body making decisions and see and try to get a view of what they think of the market. So I think it will be helpful, even though the rates might still be maintained at this time, but at least it will be helpful to have the policy direction from the MPC.
Now, of course, the MBS expects inflation to fall faster in 2018 compared to 2017. Do you agree, and what do you think will drive this?
Yes, but I would not say to single-digit figures. I would not say to sub 10%. That is highly unlikely, given the fact that so many factors contribute to that. But yes, we still see a drop in inflation going into the year, but not to single-digit figures. At least my opinion, that's what I think.
Where do you see the figures dropping, say, by the end of the year?
That's a tough one, but I would say it won't be far off to see it at 12%, 11, 12%, just to be conservative.
Interesting, because I mean, there are those who think it will really get to that single digit, but then if you say, you know, we're not likely to see that happen in 2018, I'll just keep our fingers crossed on that and then see, of course, what plays out. Let's talk a bit more about the fixed income space. What are we expecting, of course, this week? I expect T-bills to mature?
Yes, the high levels of 12%. So the treasury bills market, there's been a lot of activity in the course of the week. The NTB auction calendar, the treasury bills calendar that was released on Monday, that played a significant role in directing the activities of the market. So the following day, opening yesterday, markets was very, very bearish coming from the previous day, because we saw that the CBN has dropped by around 50% what they'll be offering. And so that set the tone for where the market was. And the DMO as well did something similar in the bonds auction, bonds issuance calendar, which was released yesterday as well. So we've seen that trend in the fixed income market. We saw a bullish trend all week. On Monday, there was a lot of liquidity. There's coupon payment today. So this has all contributed to that. There's a retail SMIS refund that is coming into the market. So the bullish trend has been sustained from Monday, and we see it going further till the end of the week.
Just a quick question there. How should the investors position themselves for next week?
Next week, we expect what the major driver for that is going to be is OMO auctions by the CBN. If we see the CBN coming into the market to mop up the liquidity, there might be a slight reversal in this price hike that we've seen in the market. So price might most likely, going into next week, if there is an OMO auction tomorrow or Friday, so we might see a slight reversal in this bullish trend. So a slight drop in prices on the bond side and a slight improvement in the yields on treasury bills markets.